There are thousands upon thousands of indicators we can look at to determine the health of the economy, or we can just look out the window, take a drive down the street, or ask business owners. Sometimes it's better to see or experience the economy rather than trying to plot it on a graph. Which one is more accurate? You came here for the truth, so let me unveil that for you. Today we're going to look at the economy. There's a big difference between the stock market and the economy. And then we also have to get through what indicators really show us the actual economy. We know specifically that the unemployment rate, for example, is a fictional number. It is not accurately depicting how many people do not have employment. I've done an entire video about it, and you can see that if you haven't already. Well, let's begin by taking a look at this. I'm sure you've heard about it before, but Robert Shiller has a indicator that he calls the CAPE ratio, or the cyclically adjusted price earnings ratio. All right, the PE ratios, many people know about that. Well, Robert Shiller has his own. It's the CAPE ratio, and he talks about that here. I'll show you a chart in a second. There's an interview with him. He made a couple points. I'll bring it to you quickly. Near record US stocks still have scope to zoom to new highs, according to Robert Shiller, the Nobel laureate who's famed for his analysis of asset price bubbles and who last year warned that the market was overpriced. The stock market could get a lot higher before it comes down. It's highly priced, but it could get much more highly priced. It's a risky market now. So remember that. We have this here being in bubble territory, and what he's suggesting is that it can definitely go higher from here. But there's risk, and that's what people are not worrying about. The risk factor. All right. There's more in here, but I want to flip to the next one. He's talking about the trade issues and then says, aren't people thinking about that? Is that a good thing? I don't know, but I'm thinking it's likely to be bad times in the stock market. And clearly, he makes a very good point. This has not been priced into the market we see today at all. Why? We have major issues that could be taking place that are escalating, getting to that point. And somebody has to say, is it officially happening right now? Is this it? Are we here? Are we there now? As if some sort of flag is going to go off, or there's going to be some sort of announcement, or there's going to be sirens happening everywhere. That's not the way it works. You don't realize it until you're already in the mess. Well, here they're talking about the CAPE ratio, and I'll show it to you right here. Not extreme. Shiller's favorite equity valuation measures shows that the S&P 500 below the tech boom levels. So tell me for a second, everybody listening, this is where we were at, according to the CAPE ratio, during the tech boom and bust. It was at, according to this, probably about 44, it looks like, at its absolute peak. Okay, 44. And here we are today. I believe it's at 32 and change. Other than this one moment here, we are over any other peak that we have seen in the past. Not to mention the rest of the time here. Okay? But let's not talk about that. Let's talk about only this brief moment in history where we were at the most ridiculous high in the CAPE ratio ever. So forget about all the rest of history. This is going back to, looks like 1881, all the way up until today, and just one moment, just one moment, maybe a year, that it was higher. and we're going to focus on that. And according to that, it's not extreme. Well, we have a very different opinion. That's why these indicators, while I love to look at them, I show you them, I aggregate them, I bring them to you, they're only telling you a very small part of the story. According to the CAPE ratio, we're not the highest it's ever been, therefore everything's just fine. That's not accurate. I don't agree with that. 51% of people live paycheck to paycheck. All right? Their issues are wages and the cost of living. Ultimately, for those folks, the question is, are those paycheck to paycheck dynamics getting better? This is talking about the actual economy and how the economy supposedly is getting better, but do the actual people feel the better economy? And the answer is no. When you talk about the economy writ large, that is an abstraction for people. When you talk about getting to the end of the month and being able to pay your bills and set some money aside, that's not an abstraction. When I look at the economy, this is something that has nothing really to do with Wall Street. And that's where people don't understand. Global economic collapse. I'm talking about the economy. I'm not talking about global stock market collapse. What I wrote a book about and what I talk about is a global economic collapse. The economy can be collapsing while the stock market is making new highs. Look at Venezuela. Stock market is doing amazing. But there's something else going on there right now. Well, this right here shows us that individuals are living in very hard times in many cases. Yes, there are a bunch of people today, the top 10%, that are doing very well. Top 20% is doing okay too. But everybody else is not doing well. Well, not doing as well as the top bunch, that's for sure. And it gets, basically the higher up in the food chain you go, the better off you're doing. Especially since the financial crisis, things have really separated between the two groups. Local governments across the U.S. are taking over dying shopping malls. These municipalities concerned that vacated retail centers will blight the landscape and drag down surrounding property values have been buying up malls they fear are being starved of capital by the private sector. So nobody's getting in there. Nobody's buying up the retail. Nobody's filling up the malls, so the government is going to do it. That means the taxpayer has just bailed out America's shopping malls. It's ridiculous. Do you think maybe that they shouldn't have built it in the first place and that it's totally fine that this happens? It went out of business for a reason. It went out of business for a reason. It doesn't need to be there and nobody needs to buy it. And yes, they say that, this will drag down the surrounding economy. That's not nice. I mean, that's really not nice. The property values go down. There's stores around. You have certain anchor stores, right? All these retail companies today, the big box stores and everything, they've been all closing. These are really the anchor stores for these malls. The malls bring in business. They have the food court and people are eating at the food court, and there's other stores in the surrounding area, and you have all these businesses that are attached to that. There's people that work at the mall to keep the mall running, maintenance people and this and that. This is important. I understand that a mall is good in that way. However, if stores are closing up, you don't solve the problem by bailing it out. It's just not going to be a solution. Governments often rely on land banks to fund the purchases. These government-backed or quasi-public entities are usually used to acquire derelict homes and lots through tax foreclosures when it is clear that no private investment is forthcoming. As we recover from the recession, the market has reabsorbed some properties, but not in the smaller communities that never recovered. In those places, we're getting more questions about how to deal with the abandoned shopping centers. And we've got a serious problem. I'll show you the graph that goes along with it. Clearly, a lot of that problem exists with the C-level malls and not the A malls. However, in general, when I go to areas of Toronto, for example, but I'm also seeing it in the places I've traveled. You see a lot of these stores, they're open. I see the store open. I see nobody inside the store. I see people at the food court. I see people lining up at Starbucks. I don't see people necessarily buying that much at a lot of the stores. I see some of the brand name type stores. People are in and out of them. But I don't see a lot of the boutique shops that are there that are just, there's new, you might have a plaza, a little strip mall in your area, and it's just constantly new stores. Every 6 months, every year, there's a new store filling that place. And there's like an anchor store there that probably is always there. Maybe it's a place to get your groceries or something that is generally a mainstay in the area. And then you have surrounding stores that they just can't stay open. Now maybe there's something wrong with the stores, but does it have to be every single one? I think that's showing us the general economy. Now, speaking of the housing, look at this. You could buy an entire town in Georgia for the price of a luxury apartment in New York City. I believe it was the price of $1.7 million. This here, Toomsboro. It's for sale. There's actually a website associated with it, believe it or not. And it's got a small town, 700 residents, and you can buy the town. If anybody lives by here, I really, really would love to know if you've ever visited or would like to visit it. Please contact me. I don't know where this is, but I think it would be fantastic to have some footage of it or to have some information that goes beyond it. So let me know if you do live in this nearby at all and you want to drive through, you can get some photos or something that we can cover this. I'm interested in this. Let me know. I think it's interesting to see that an entire town is going on sale. They want to sell it to somebody who wants to preserve the area and not necessarily put up a Walmart or something. If you bought a Bay Area home in 2012, pat yourself on the back. You almost certainly doubled your investment just by sleeping in your own bed. And the reason I brought this up, first of all, is the fact that the prices have become so astronomical. It's ridiculous. But also, they mentioned something I thought was interesting, and that is you doubled your investment. Well, it's not an investment. It's the place you live in. It doesn't actually put money into your pocket unless you're pulling it out as an ATM. I know that many people do this. However, I do not suggest it. This is something that I think that people should be very, very careful about, because when the home prices heat up this high, we end up having echoes from the past. And many people would say that that's not true. We don't need to worry about it because everything is fixed this time around. And I would say, I just try to be polite and say I disagree. Okay? This here is basically just talking about the situation in California, people living on the streets, people unable to make ends meet, people that don't have jobs, people that are technically above the poverty line, but they don't technically qualify for any of that. We've got a problem here, okay? The share of Californians in poverty fell to 19%, a 1.4% decrease from last year. However, policy experts warned that in spite of the good news, more than 7 million people still struggle to get by in the state. And I think a lot of people have left the state of California in this situation, and they're going to places that are more affordable. I think that that's a lot of what has happened here. There's more in this article. If you're interested, I'm going to end the video there. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support the channel, so I do appreciate that very much. And last but not least, if you want the financial education you were not taught in schools, these two books have it all. You can actually flip through the book, all books. All you got to do is go to the link in the description. Check it out for yourself. If you're more interested in the audiobook, you can get that at themoneygps.com.